Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Morning, everybody. Cowboy here. It is Thursday, February 26th, and we're back. We're here. I am a little better today, and that's good. Steady temperature going back to yesterday afternoon, so that's good. On the mend. But yeah, I came in here last couple of days, over 100 fever, did the show, right? It's called dedication. So did the whole live lab, did what there was to do. So yeah, here we are looking at the NASDAQ. We'll jump right into it. We'll get into the goodies later. Got some goodies for you guys in the description. I did predict this yesterday, and that's what happened. I had a double, when it comes to consolidation on the NASDAQ or anything else, price bounces back and forth. Eventually it breaks one way or the other. So I was like, it's either going to reject and head back down or it's going to break back up. But I was pretty sure it would not break down, right? So there you go, right? And the way that I treat things like this from a trading standpoint is if price is approaching some kind of a resistance like this to this blue line right there, I'm either going to short it or I'm going to go long after the breakout. And it's easy. You can just, use your algorithm or even just price action. And if you see the rejection, to go short. If you see a breakout, then you can go long. It doesn't always work. You can have fake breakouts. You can have a fake rejection, but most of the time that is going to work. Now, how often that works is going to be based on what kind of algo you have that's helping you with the prediction. It's going to be based on which asset you're running and what the time frame is. So you have to back test to know the exact probability of that win. But that's a way to tilt the odds in your favor. And this is what trading is really all about. It's all about finding little things to tilt the odds in your favor. And in this case, it is a confluence of the price action here at that line, plus algos that give you the clues. Okay, is this vulnerable? Is it strong? Is it going to break out? Does the algo give us like strength, metrics, or does the algo give you metrics that this is kind of slowing down? And that's how you tilt the odds in your favor, right? Now, to know the exact odds, that's when you have to go back and you have to test it. And we teach you all the stuff here at Algo Factory. So in this case, though, I was able to predict that properly, right? It was either going to reject or it was going to break out, and break out it did. And that's plenty of profit for the traders. So that's, for your sort of, not your hardcore day traders, but your swing traders. That's a very, obvious trade. Happened right at the market open, more or less, right? Once it broke out. And then you had this other kind of flip around trade that the day traders, I'm sure, could have taken advantage of. At least one short here at resistance, and then to pick this up. So the day traders had plenty of action here that was rather obvious. So what's the broader picture of the NASDAQ? What does it look like it's going to do? Like, how is the market? Is it strong? Are we going to see the market rebound? I would say, at least for now, there is a bit of strength, but I do. This could be the beginning of a pivot. It's possible, but usually just the metrics that I have right now, I don't know that we're out of the woods just yet on the NASDAQ. Like, looking on the weekly chart, I'm going to erase a lot of this mess here. And I'm going to get rid of the whole suite. I'm not really using this right here. I know it's on there, but there you go. Just some of the metrics I'm seeing. It still has the possibility of pulling back, but the NASDAQ also is that one thing that they just have to keep moving. That goes with all the indices, by the way. NASDAQ, SP 500, Dow, they all need to keep moving, but the NASDAQ does have that kind of the component of overinvested tech. Yeah, we can talk about expectancy. Okay, sure. Yeah, we'll talk about that. We'll talk about that after the NASDAQ. It's a really good subject. From Top Best 1T. Hey, Top Best 1T, do I know you? Like, that's a really good question. So it's I'm wondering if you've been a client before, or why you would talk about that. But yes, I will discuss that after we talk about this. So we're going to see a range, right? or we're going to see a breakdown. Like there are only three things that can happen, right? So what I'm about to say is not profound. It's anybody that knows anything knows. You're going to see either a range for some time, and we just talked about that. A range will either break down or up, and I'm not going to really have a good idea of what that is. I mean, technically, it's kind of in a range now. It's not the cleanest range, but there's enough data here to say, okay, we might be in one, right? We'll see. We're going to see how price reacts, if it can even make it up to 26.3, which was the top, even if it can make it up to this level, and it might. It's kind of tough. There's some metrics that are a little concerning. You know, is it, if it rejects, then we might be able to continue on that range. It might also be where price breaks down. I don't think we're quite ready to predict a break of the all-time high, but it is the NASDAQ, and that could just simply happen. A lot of times, a lot of money gets crammed into it; it just breaks out. But I would say that right now, price is going to struggle to make it all the way up to this area. And then even if it can, I think it'll reject based on the current metrics. Now, by the time it gets up there, the metrics may have changed. I'll look at the market at that time. I'm just telling you what it looks like based on the data we have right now. There's a lot can change between now and, this is like weeks out. You're looking at a chart that goes back to last year. A lot can change in a month or, whatever that is. So for the meantime, what I would expect kind of near term, because that's weeks out, we're not really trading that way. I would expect price to kind of grind up towards that $26,000, 26.3. I think it's just going to grind up. I mean, it could get strong and make its way up, but the what I'm seeing right now doesn't give me that kind of confidence. I think we'll probably see something like that, maybe. We are sitting at a local resistance. Let me get rid of the whole suite yet again. I'm gonna have to just get rid of this whole suite. I don't use it. Let's do hide. So, I mean, it could just continue up. It could kind of pull one of these two. So it's hard to say which way that's going to go, but it could simply just grind, whatever the case may be. That's what it looks like. You also could see a pullback because look, you're sitting right at a resistance. Like I wouldn't go long at this very moment because there's a resistance right there. 1, 2, 3, 4 rejections. So it's kind of one of those things where I wouldn't touch this on a long until it broke that. Right. I wouldn't go long on this until it broke above this area. It could simply reject right there and then do who knows what, but probably this. We're just gonna have to see, right? It's at a delicate time. So top Bez1T asked for expectancy. Expectancy is it's kind of a longer talk, but when you trade, you're gonna have your win rate. So let's make this visible, right? Interesting. It can't get any bigger than that. I can. All right. So it's a formula, right? Win rate, which is how many times, like what percentage of your trades you win, times your risk to reward ratio minus your loss rate. Is that what it is? Is it win rate? I'm gonna, dude. I want to just make sure I get this right. I know what it is, like inherently. It's actually your win amount. So it's your I'm thinking about this before I even look it up. Look, whenever you trade, like you test trade, you're going to have a certain amount that you risk. So let's just say that you have a $10,000 account, you're going to risk 2% of that. That's $200 a trade, right? So in this case, let's just say a $5,000 account to make the numbers really easy. You have a $5,000 account, which is $100 a trade. You're going to risk 2% of your entire book, right? It's $100 per trade. So then you're going to do $100 times your win rate. So let's say you win 65% of the time. And then, well, it's not $100 because you have to actually multiply it by your risk to reward. So we'll get into the risk to reward. We'll talk about it in a minute. And you subtract $100 times just one. Your risk to reward on losses is one. So don't worry, this will all unfold. I'll explain it as we go. It's always going to be one in the second part of the equation. Okay. So what does all this mean, right? What does all of this mean? Okay. Well, first of all, your risk to reward ratio, when you take a trade, you're not going to just double or nothing every time. It's not like you're just going to win, you know, like you're not going to bet $100 to win $100. When you do an algo, you set this up, you're going to have an average risk to reward ratio where, for me, I try to keep my risk to reward around 3-to-1, but it doesn't always work out that way. My minimum is 1-to-1. I'm sitting, like right now these days, it's kind of like around 2-to-1, I haven't been tracking it lately, but I try to keep it ideally above 2 and as close to 3 as possible, but I'll still trade a 1.2-to-1. It's just, I'm not that excited about it. I generally don't take those trades, but technically my minimum is 1-to-1. It's just that my setups are built to have a better risk to reward than that, so they just don't end up happening. That said, like this particular trade is if I entered right here where the green meets the red and I go all the way up to here, I've won. If I enter here and it goes against me and it goes down to this level, I've lost. So on the chart, what does that look like? Let's say that let's say I look for a breakout trade right here and I get the pullback and I go long. Well, then I'm going to enter. I probably won't get the exact pullback, but I'll enter a little bit late, because that's just how trading works. And then I will be out before that resistance right there. This is a 2.89 to 1. So what does that mean? Well, you see price goes almost 3 times as far if I win, and it goes not quite as far if I lose. Now, it doesn't mean I'm going to take all this. I manage the trade. If the algo tells me I need to get out, I get out. I might take partial profit on the way. So I generally don't get a 3-to-1, even though the trades are 3-to-1. It just depends on the scenario. I have a lot of trades that are like 4 and 5-to-1, and I can yank a 3-to-1 out of those. So, it all depends on how you manage your trades. And I have algorithmic exits, which kind of make things a little tricky in that regard. But to keep things really simple, this is a 2-to-1. It's almost a 3-to-1 risk to reward, because if price goes all the way to the target, I will be going almost 3 times as far as if it went to my loss. Now, if it went to my loss with a $100 trade, the $100 risk, then I have lost $100. That's the way it's set up. I set this up so that if price goes against me and it stops out, then I've lost $100. But if it goes against in my direction and I've won, then I'm up $289, right? That means that I can actually lose 2 of these, win the third one, and still be $89 in profit. And that's if price goes all the way to target before I manage it, right? So even if it doesn't, I still have it risk to where my risk to reward is it's usually above 1.5, all said and done, and very oftentimes it's closer to like 2 or 3. So that said, that's our science here of tipping the odds in your favor, so that when you win bigger than when you lose. And in this case, it's 2.4 to 2.4 to 1. So that being said, right, let's move back. Risk to reward ratio, the average. Let's just say you're getting your 1.6 risk to reward ratio, right? And then when you lose, it's always 1. That's what your risk is based on. So you're just times 1. So you can even just like do that. So now you have the math, because your risk to reward ratio, You know your win rate. Via the Gorilla, good morning, sir. How you doing?
Good morning.
We're talking about expectancy. Somebody in the audience
Who is
asked for that.
pregnant?
What's that?
Who is pregnant?
Well, if I tell you, I'd have to kill you. So you got
So you're pregnant.
yes.
I know that.
So you have 100 times 1.6, right? So it's $100 times 1.6 risk to reward ratio, which is just a number I pulled out of the sky. It's just saying that like your average risk to reward when you manage a trade and you do everything else ends up at 1.6, meaning your trades are going to end up effectively looking like this, where you get a lot more profit than you do loss at a 1.6. And that's a reasonable risk to reward ratio, all said and done. That's actually pretty profitable. And then you win 65% of the time. So to do the math, it's 160 times 0.65. And I might be able to do that in my head, but I'm not going to even do that today. It's just still, even though I'm feeling better, I'm not there. So let me get out the calculator. Oh, good Lord. There we go. Calculator. We're going to do 160. Now you win 65% of the time. So you times that by 0.65. That's 104. So when you win, every time that you win, you make $104 in this case. Or you average out the wins, I mean. So when you lose 35% of the time. So it's 104 minus 35 times 100, which is 35. And now you actually know on average, every time you take a trade, what your gain's going to be on average. This is accounting all your wins, all your losses. Every time you take a trade, you're bringing in $69. That's win, lose, whatever your case may be. Once you've done the math here, like you back test to get this data and then you forward test to get this data. When you forward test, this number is going to be pretty accurate. You back test, it's going to be like, 75 or 80 or because psychological reasons and other reasons. But long story short, if you have forward tested, live tested, you know how you're going to trade, then you know what the numbers are going to be. At least you have a much, much closer idea. And you can say in your head, every time you take a trade, it's worth $69. Now you might win 200, you might lose 100, you might win 250, you might lose 80, whatever the case may be, but it all averages out to $69 a trade, all wins, all losses combined. So, that was the request that was made by the audience. So that's what we get to talk about today. So we'll give that out to the audience. I like when people come in and request things. We'll do a little bit extra on the live lab today. So we've gone over those. So tune in next week for more stuff, more charts, more everything else. What we talked about today is how people actually professionally trade and make money. That's what that's about. This is how your trading becomes a business, right? As opposed to just rolling the dice and hoping you can bring in some money. When you have a steady idea of the amount of money that can come in, you can actually make plans. And I appreciate it. Thank you, Top Essett. Top, if you haven't done so, Top, or anybody else, go into the description, click on the link in there. There's a free algo. You get to see me build it. I turn it into code. I put it on TradingView as a coded algo. And then there are tools that traders use to actually plug that algo into their broker so that it can trade without them even being there. Now, you do have to optimize the algo. You have to back test it. And, you have to do those. It's not plug and play per se, but you see how it's done. And if you know what you're doing, you can actually optimize it and probably make it profitable. Go ahead and do that. And, Top, for being somebody asking about expectancy, I would expect that you would want to come talk to us at Algo Factory because we actually teach you how to be profitable. Via the Gorilla, can you get us out of the public live lab, please?
Yeah, absolutely. With that being said, folks, we're at the end of the show. Join us in the private live lab where you'll not only get the tricks of the trade, but also learn how to profit from it, utilizing algorithms that work on your behalf 24 hours a day, 7 days a week. AlgoFactory.tech. Learn to trade like a hedge fund pro. And with that being said, Cowboy, let's go.
Join us or die.